right, so to take us through all those numbers and what he's looking at for the week ahead, Pete McGuire joining us from XM. Pete, a very good Monday morning to you. Why don't we start in Europe with that headline out of Germany? Looking at your note, you're calling it the European horror show.
Yeah. Good morning, Andrew. It certainly is a horror show when you're thinking about the cost of energy and what they're doing in Germany. 500-year, the worst drought in 500 years. And the energy costs are just, 40 euro it was last year, now up to about 570 euro for a value of electricity or power. So, yes, the costs are just mind-blowing for the consumer over there and naturally for the economic powerhouse that we call Germany.
Yeah, so it's going to be interesting just as, I guess, to how the European Central Bank is going to respond to this, because you're also seeing that underlying weakness in the euro economy.
Yeah, absolutely. And that's been demonstrated by not only the weakness, but, your PMI is under 50 now. So they're in that contraction phase. And then the next thing is that value of the euro against King Dollar. King Dollar's over 108, and you've got parity against the euro. Are we going to see a crater over the next couple of days leading up to the symposium at Jackson Hole? Maybe a 99 handle. These are, uncharted territory, Andrew. So it's going to be fascinating how it all plays out. Great for traders. Everything's getting, smashed compared to the dollar.
All right. Well, just before we get to Jackson Hole in the States, let's stay in that part of the world across the channel. What are you seeing out of the UK at the moment?
Not a lot of good things. Probably the best thing about the UK at the moment would be a sightseeing expedition. But as far as economic growth, you've got record high inflation, as we know. We understand what the Bank of England has done with all of its moves forward, across interest rates and their policies in that regard. But you've got PMIs coming out. They've got the surveys released tomorrow for August, and they're not going to be startling in any way. So, yes, I think further weakness across the pound. That's demonstrated with a cable now at 118 against the dollar. And maybe we're looking at a 115. And it's getting very tough over there in the UK, from an economic standpoint, Andrew. So, yeah, high inflation through double numbers. And maybe they're the first one to hit the double numbers for, a mature market.
Yeah, I guess it doesn't help too. They've got political paralysis essentially over there ahead of selecting their new leader to replace Boris Johnson at the same time, which is going to happen next month. Pete, let's head to the States. So obviously it's all about Jackson Hole at the end of the week.
Absolutely, Andrew. Yes, the symposium and all of we've got about 5 Fed presidents talking. Kansas, Philadelphia. I notice the old Dean Harker, or the Wharton School Professor Pat Harker is going to talk. So I'm interested to hear what he has to say, and their general consensus across, the landscape of the US. Each state has a different, I think, experience how Main Street's performing, economic growth, and valuations. We've had a huge uptick as far as $7 trillion added to the stock market over the last 6 or 7 weeks, Andrew. So it's been incredible. And many people are saying that's just the unwinding from hedge funds and options trading and cutting short bets. So is the momentum going to continue? Are we at that inflection point now? It's going to be a good week. Nothing short of surprises in a hot August, Andrew.
Yeah, we get a bit of data too out of the States, not the least being June quarter GDP. Of course, the US technically in recession already at this point, plus that the PCE core deflator at the end of the week at the same time. So do you think by the end of the week we're going to have a greater understanding as to what the Fed is going to do at its next meeting, whether it goes 50 or 75 basis points?
I would think so. We're all waiting. I mean, this is why we want to hear from these presidents across the different the members of the Fed. We want to hear what they're prepared to say, what they're experiencing, and that's going to give us a fairly good indication what Fed Chair Powell is going to present. And we're hanging off every word because it gets to the point. There are so many different components to this as far as unwinding of mortgage-backed securities. You've got are they going to increase the pace of that, Andrew? All of these conditions need to be observed and I think appreciated, and that's going to really come down to a couple of things: the value of the dollar and the momentum to the upside and what's happening to US equity. So all of those, and of course, short-term rates, we're taking on board what's happening with the UK. Short-term is now, negative compared to, or the long-term as compared to the short-term. So, 10-year versus 2-year, the worst conditions we've seen since 2008.
Yeah, absolutely. All right, Pete, what are you looking for locally? There's not a lot of data out this week. Of course, I guess that we've been dominated by those earnings results.
Yeah, exactly, Andrew. We're just keeping an eye on what's happening domestically here. The Aussie dollar sitting at 68.75 sort of handle. Is it going to get more downward pressure? Are we going? Is 67 the new home? So as far as a trading mindset, it was an electric week last week. I think this week won't disappoint either. Probably some volatility the first couple of days of the week, and just seeing what the mood is across our domestic equity markets. And naturally, some of the comments coming from, government and so on.
Pete, what's your observation with the commodities at the moment? Certainly in the energy sector, we did see oil come off, but how are you seeing that? Particularly, I guess, this is hinging on global demand at this point.
Well, exactly. Oil's come off, Andrew, and that's been great for the consumer, but it's diabolical from a nat gas perspective. We're at $9.33. So it's been very, very heavily bid up, energy, gas consumption, and naturally you've got record high weather outages, and the conditions across China. It's going to be immense for gas, and across Europe for air conditioning and so on, and the drought, and so all of these issues. So I think there's further upside for gas prices, and energy. We might see that continue to tail off, but obviously 90 is the handle. I'm looking there, it's $91 nearly for WTI. You got 96.70 for Brent. I think it's going to be range bound, probably that 90 to 100 handle over the next couple of days. I'm not looking for any breakouts unless we see something dramatic happen.
Peter, obviously referencing there just as far as what the dollar, that strength remaining there, we're seeing yields having moved higher. That has essentially undermining gold at this point.
Yeah, exactly. You've got, it had a nice run. It's back at 1760, whipsawing again, Andrew, up to 1810, 1820. If you're an intraday trader, they're loving it because, the bugs out there are just rubbing their hands with glee because they're picking up 10 and 15, $20 moves over a matter of, the same amount of hours. So, I can't give it a direction where it's going, but never short of surprises is the silver and the gold market.